do you think, the local market unable to hold on to some of those small gains we made earlier in the session?
Nadine, I think there was probably a couple of reasons why we really couldn't push some of those gains on the market today. Of course, looking at this morning, we saw some pretty mixed leads coming from overseas markets. So unfortunately, not much positivity to really drive our market this morning. But of course, we saw that GDP data coming through, which was actually a slowdown from the previous quarter. And of course, we saw those huge tumbles in the gold price as well as oil prices overnight. So that all sort of making our market sort of pretty flat today. And of course, yesterday we saw those fresh 6-year highs as well. So I think probably investors are a little bit cautious at these high levels that we're trading at the moment. So I think that was all sort of adding to the reason why we couldn't sort of push some of those gains further on our market today. One of the best performers was that telco sector. So it does look like investors do still seem to be jumping into some of those high yielding stocks as a bit of a safe haven in terms of some of these record high levels at the moment. But as you said, no surprises that we did see that material space and energy space coming under pressure today. Volumes did look a little better, so that was a bit better, but overall a pretty flat performance in the end, which is pretty disappointing, I suppose, given the region's performance. But overall, we did see, you know, pretty flat performance.
Hey, Leanne, is that how you viewed that? Do you think investors have another worry if we're in, you know, officially the territory where the door has been shut on any further interest rate cuts coming from the RBA at least?
I do think investors probably are of that expectation. I think the expectation now is that the next move will be upwards, particularly given the fact that we are slowly starting to see this transition away from the non-mining sector. And of course, this GDP data today did indicate that it is still remaining challenging. But if we do have a look at some of the other data points that came out of today, it does indicate that these record low interest rates really are adding to a rebalance in the economy, which is slowly starting to come. And I do think the expectation for the interest rates will be on the rise. We saw housing construction up 2.3%, but we also did see real business investment up about 1.1%, and also consumer spending remained pretty resilient, up about 0.5% as well. So if we have a look at some of the other sectors away from the non-mining sector, some of those data points actually looked pretty strong. So as I said, I think indicating that the next rise potentially will be up, and I do think investors have that expectation in mind. Also, if we look at some of the forward-looking indicators such as job ads, skilled vacancies, and of course business indicators and business confidence, I think that's all pointing to a pickup in demand as well. So I certainly think we need to have a look into that, and I do agree with Mike. I think the expectation is for a rate rise rather than a rate cut now.
Okay, so let's get into a bit of company-specific stuff today. Leanne, Aus Pharmaceuticals, it's a parent company of Priceline. They're on nearly every corner, at least in New South Wales here. Having a fantastic day, up 17%, a profit upgrade coming from the company. Just how significant is that?
Nadine, it looked a really positive performance today. Market really reacting well. Investors did like this profit upgrade today. Of course, they've lifted their underlying net profits above their previous guidance level, so now guiding to underlying profits to be up about 32% on the previous year, between $31 and $31.5 million. They also said that their pharmaceutical sales are up about 12%, their Priceline sales up about 6%, and they've also added about 27 new stores across their network. So that now takes their total network of Priceline stores to about 390 across the country. So certainly looked pretty positive once you did drill down into some of those announcements that came out today. And I do think the view going forward for this stock does remain pretty positive, particularly given the jewel in their crown really being the Priceline pharmacies. We are expecting that to continue performing very strongly in terms of same-store sales and revenues coming through, and we do believe that their profitability will be sustainable over the next sort of 2 to 3 years or so. We also expect some further debt reduction over the next 5 years as they start to pay down some of their loans, and also looking at the implementation of that one enterprise system. We know that's going to amalgamate some of their back office systems. That's making some pretty good headway, although today they did announce there will be a bit of a delay to that coming into the first quarter of 2015, but we actually expect there to start to be some cost savings coming into the second half of FY15. So overall, I think the outlook for this stock looks pretty positive, really confirmed by this positive commentary that did come out today, and investors really did like this profit upgrade.
Sure.